evening. This is Helen Thomas and the CDFM Study Group. This week we are going to be covering CDFM Module 3, Competency 1, Fiscal Law. However, we are actually wrapping up review of CDFM Module 2. Again, we are wrapping up review of CDFM Module 2, but if you look at the way how the test is broken down, fiscal law accounts for 34.9% of the questions that you may be asked on the Module 2 exam. So I have included this study session today as the last portion of the Module 2. So on the phone line, did I answer your question, your satisfaction?
Yes, ma'am. Thank you.
Okay, you're welcome. All right, so we'll begin on page 7317. Basically, it gives you an understanding of what fiscal law is all about, the basic idea behind it. Unlike other standards in the, I'll say the military, since I'm familiar with federal government as far as the military goes, if something is not written in the standard, you often can do that until someone challenges you. However, when it comes to fiscal law, we must see it in writing in order for us to execute the funds accordingly. So that's the basic idea behind fiscal law. On the slide at the top right of page 7, it talks about the various sources that is used to build the fiscal law that we have to understand. As resource managers, financial managers, we need to know what the law says about the use of those appropriations. So true, we can go to our ethics lawyers to get additional support, but it's important for us to know the basics because we are the ones signing off as certifying officers and the use of these funds. So we're going to look at the understanding again, the authorization law, the appropriation law. You have different statutes, other laws, Comptroller General. So the CG on that slide at the top of page 7 is not commanding general. It's the Comptroller General. Can anyone tell me who does the Comptroller General work for? And if you're on the Facebook, you can type your responses at the bottom. All right, anyone in the phone line? So occasionally I'll ask questions. You're not obligated to respond, but the more response is better so I can get a feedback that you understand. Okay, so the Comptroller General is the title of the person in charge of the GAO. Again, when you hear an acronym, you need to know what it stands for. What is the GAO? The Government Accountability Office. It's an external auditing agency that works directly for Congress. So think about it. Congress gives us these appropriations and they have limitations, they have guidelines, they have do's, they have don'ts. They need a way to ensure that we are actually honoring those restrictions. So the way Congress does that is through the use of the GAO office. Congress gives us the appropriations, the GAO monitors to ensure that we follow those guidelines. So the CG is the Comptroller General, is the individual or the title of the individual in charge of the GAO. All right, so the next page, page 8, let me get my glasses. Constitutional authority. So again, the sources for fiscal law can come from the Constitution. And if you've been in previous sessions, as I mentioned, you need to know the 3 branches of government: legislative, executive, judicial. That is the order you should learn them. Legislative or Congress, executive or the president, judicial is your courts. The reason you want to learn them in that order is because in the Constitution, Article 1 addresses legislative, Article 2 addresses the executive, and Article 3 addresses the judicial branch. So automatically when I look on page 8 and I see Article 1, I know that they are speaking to the legislative branch, makes the laws. So you need to know the bullets listed on the bottom of page 8. Article 1, Section 7 allows Congress to raise revenue and pass bill and delineates how the bills are passed from Congress to the President for signature. Article 1, Section 8 empowers Congress to collect taxes. So you look for the key words. So Section 7, raise revenue and the process to pass the budget and or the bills. Section 8, collect taxes. And Section 9, Clause 7. If you don't remember any of them, you at least need to know Article 1, Section 9, Clause 7. This is the reason the government shuts down if we do not have an appropriation law or a stopgap, which is the continuing resolution. Because Article 1, Section 9 says it requires appropriations in law before money may be spent from the Treasury. It means before you can take any funding out of the Treasury, you must have an appropriation law. That means it's signed, not it's in process or progress, it's actually signed. So the temporary appropriation law is the continuing resolution, the CR. So Article 1, Section 9. Article 1 tells you they're addressing legislative. Section 9, Clause 7 tells you no money shall be drawn from the Treasury without the appropriation law. There's different regulations. So earlier I mentioned what the GAO is, Government Accountability Office. They work directly for Congress. So it makes sense that we receive guidance from the GAO. So when it comes to federal appropriations law and how we use the appropriations, the GAO Red Book. So I'm going to give you the way how to remember these. Think of a stoplight. A stoplight is red, yellow, and green. So the GAO Red Book deals with appropriation. The GAO Yellow Book deals with auditing. And the GAO Green Book deals with internal control. What I'm saying is not directly on this page, but if every time you come up to the GAO book and you go over the stoplight scenario, you will always remember which one goes with what. So red, appropriation; yellow, auditing; green, internal control. Any question on that? So if you look on the bottom of page 8, it says the GAO Red Book is the most authoritative source for the use of these appropriated funds. Most authoritative because if they give the guidance and they're the ones coming out to ensure that we follow what Congress has stated in the appropriations, then it makes sense that they are the most authoritative source. So that's important for you to remember. On the bottom of page 9, so you have several laws and regulations. You can read through the rest of it. Just because I'm skipping does not mean you do that when you initially look at the information. The Budget and Accounting Act of 1921, what did it provide? Let's see, it said it required the President to submit an annual budget to Congress for all three branches of government. So the President, the Presbut, the federal budget includes the budget for all three branches. So the executive branch, if I say the executive branch submits the budget, that's still correct. If I say the President submits the budget to Congress, that is also correct. So play on words. The Budget and Accounting Act of 1921 also created OMB, Office of Management and Budget. So the reason I say you need to know what these acronyms stand for, because if you notice in the study guide, at certain points, all they list is an acronym. So you need to know what OMB stands for, which is Office of Management and Budget. So I said that Congress has the GAO and the Congressional Budget Office. The executive branch has OMB, Office of Management and Budget. So who can tell me what does the DOD have for that same role? What is the title of that individual at the DOD level? That is the DOD Comptroller, Under Secretary of Defense, USD Comptroller. So you got to know your hierarchy and who works for whom. If I throw all of these names in a puzzle, can you then pull out where they go? That USD Comptroller works for the DOD to do all the resource management functions. OMB works for the President or the Executive Branch. Congressional Budget Office works for Congress to do the budget, and they have GAO to do the external auditing function. Page 10, make sure you review those laws and description. One you're going to have to be familiar with because it comes up quite often throughout Module 1, 2, and 3 is Omb Circular A11. So it gives all the instructions for the development of the federal budget. So you will go to Omb Circular A11. Just remember that, because there'll be different OMB circulars that you're going to have to be familiar with. So budget formulation, execution, all of that is covered in OMB. So remember, from GAO, the guidance was called the GAO Appropriations Law or the GAO Red Book. From the OMB, the budget information is covered in a circular, Omb Circular A11. If it's at a DOD level, it'll be a DOD instruction, DODI, and it's most likely 7000.14R, because it covers mostly everything that we do. All right, let's move on to page 12. Let's go now into the availability of funds, PTA, purpose, time, and amount. So typically when we operate in our day-to-day functions, we say someone committed an ADA violation. Well, for this exam, you got to take it an extra step further. You got to say which ADA did they violate? Which did they violate purpose, time, or amount? So the slide on page 12, if you learn them in that order, it'll be easier for you to remember. And then you just got to figure out for the amount, since it has 3, what does each one cover? So purpose, you see, is 31 U.S. Code 1301. Amount, time is 1502. Amount is 1341, 1342, and 1517. That's the chapter, that's the paragraph. So purpose, on page 13, 31 U.S. Code, that means every appropriations has a specific purpose. When you get that language, you need to read it. Can I make constructions out of this particular appropriation? Can I use procurement to do training? So you got to know the use of those funds. Purpose. So when it says appropriations shall be applied only to the objects to which the appropriations were made, all that it means is when you use that appropriation, whatever you're trying to do must be directly related to the appropriations you're using. 31 U.S. Code 1301. On page 14, when you start thinking of purpose of the use of that appropriations, you have different expenses to consider. General operating expenses include your training, travel, your TDY, miscellaneous pays, and so forth. So they give you a list of some general operating expenses in all of those categories. On page 15, it goes into specific purpose authority. That means you receive specific instructions in how to use those funds. Some of the funds you get is what they call fence, meaning when you get it, you can only use it for that particular function. Even though traditionally you can use it for something else, but if you get a specific purpose authority to tell you what to do with it, that is exactly what you have to do with it, and only what you can do with it. Also with purpose on page 16 is you have to apply the necessary expense doctrine. The 3-part test, it says whatever it is that I'm trying to purchase must have a logical relationship to the appropriation I'm trying to use. Makes sense? I got to also make sure that what I'm trying to purchase is not prohibited by some other law. some other restriction, not prohibited by law, or not funded through some other means. Am I trying to get a contract for something that is provided through the supply system? Not funded for elsewhere. So the necessary expense doctrine falls under purpose, 31 U.S. Code 1301. If you notice what I'm doing, I'm continuously repeating the 31 U.S. Code associated with purpose to ensure that I remember, right? That's only how you're going to remember things, is repetition, repetition, repetition. So all of that is governed on the purpose. The next part of that three-part is page 17. Time, purpose, time, and amount. 1301, 1502. Chapter 15, paragraph 2 says that every appropriation has a specific time frame when you can make new obligations. Their availability. So I think later on when we deal with time, let me see how far back it is. I don't want to address it too early. It's a few pages forward. But the bottom line is, with time, every appropriation has a specific time when you can make new contracts, new obligations to the government, legally binding the government. What you have to consider with time is the bona fide need. If I need something in, let's say, December, I cannot purchase it in June because, again, fiscal year, 1 October of 1 year to 30 September. So you have to consider all of this. So bona fide needs rule typically says current year needs, current year dollars. There's always exceptions. And when you read through this material, you'll see some of those exceptions. And we're going to look at services in a little bit. But the basic idea is whatever requirements we have for that current year, we should be using current dollars to pay for it. All right, so let's go over services. Let me pick up my pen. Hold on. All right, because I like to write. This is a good habit. That's why I like the hard copy books. Is sometimes you remember certain things you want to write in your study guide so that you remember those things the next time you hear that topic. All right, so let me go over services. So there are two different types of services. A service can either be severable or non-severable. And when you read through the paragraph, they give you example. But basically, a severable service is a service that if I end the contract today, let's say it's a 12-month contract, but I don't need it. I need to end it 6 months into the contract. I still would have received benefit from that contract for that first 6 months. Some examples given: cleaning service. So every week or however often that cleaning company comes in to clean, I'm receiving a benefit every week, right? So even if I want to end the contract, I still had received benefit in previous years. Versus a non-severable is I need to repair a building. The building is in disrepair, it's got holes. If I just do part of the job, it's still not going to solve the whole problem. My problem is the whole building. And so a non-severable typically means you have to pay the full amount for that contract. Let's go a little bit deeper now into severable. And when you read the paragraph on page 19, that's what they're talking about. So I'm just going to try to condense it. A severable service. So what you need to know is, when do you obligate and how much funds do you obligate? Let's say I have a severable service that starts a period of performance that starts 1 August. It's a 12-month contract. I can legally pay the full amount of that contract prior to that new fiscal year. It doesn't matter of crossing fiscal years. 12 months or less, I can pay the full amount of that contract from current funds. However, if in that severable contract it says it's a 13-month, 14-month contract, I am still restricted to only being able to pay 12 months out of current year funds, and then the additional month I'll have to wait until I get new obligation funding. Any question on that? Make sure. So the issue you're going to have to know here is when do you obligate and how much? Which pot of funds are you able to use? Any question? All right. So the other part is the non-severable. So non-severable means once I start the job, I will not receive a benefit until the entire job is complete. The example they give here is training. If you have a training schedule, you're going to a class, you're going to a session, and let's say it takes 3 days to get all the training completed, that's a non-severable service because you need to get all 3 days of training to be able to say you are completely trained in that particular area. Non-severable means that you pay for the entire amount of whatever it's going to take to do that job. Let's see what examples they give. So I think non-severable, if they didn't give an example here, okay, they did. Example, overhaul of a ship. And if you're overhauling the ship and you only fix part of the ship, or if you're fixing a building and you only fix part of the building, you did not get the full benefit of that work. So in order for you to get a complete benefit, you got to pay for the entire amount of that maintenance, that repair. So entire amount of the undertaking is paid when the contract starts. We got multi-year changing contract. All right, so page 20. What are some permissible actions that you have before the new fiscal year begins? So this, when it comes to funding. So the first part, let me go to the second paragraph first, and then I'll come back to the first part. Most of us are familiar with the second paragraph. When you're starting a contract somewhere between September and let's say the period of performance does not start until early October, or therefore in the next fiscal year. You can start the contract request, but for funding purposes, you have to put subject to availability of funds. Same scenario, but on the first paragraph, Congress has already appropriated the funds. Let's say it's September the 1st. We already received, we're in FY22, so September the 1st, Congress has appropriated FY23 funding already. That means when the contractor writes the contract for FY23, they can cite that new appropriation. So it is not always CR. If you've been around the government long enough, you'll know that there are some years where once 1 October comes, we have our appropriation, we can start spending. But the majority of the time, we operate on the restrictions of continuing resolution. So those are your permissible actions. On page 21, they talk about funding when it comes to the obligation and contractor termination. You got a contractor who you hired to do a particular job, and as a contracting representative, you've been doing your checks and you realize this contractor is not performing to standard. So you can either terminate for contractor default or convenience of the government. Oftentimes, well, the majority of the times, these are already written in the contract. Convenience of the government means the government no longer needs this service, so we need to terminate the contract. So there's no penalty there. Contractor default, if that bona fide need still exists. So let's say you fired, you working through the KO, contracting officer, you terminated a contractor. If you accepted as the COR and you accepted any portions of their job and you said, yep, they did this and they did that, we have to pay for the work that we accepted. However, if there are additional portions of the job that they did not do, then the remaining funding could be used to get a second contractor to complete the requirement. So contractor default, we can terminate for that or convenience of the government. All right, let's go to the fun part, appropriations life cycle. So appropriations are either single, multi-year, or no year. No year is the working capital fund. That's the best example I can give you because it comes up within different sections of the study guide. And we'll talk about each. Yes. So on page 23, that is an awesome slide to be familiar with because it lists the major appropriations on the left: MILPERS, O&M, RDT&E, procurement, shipbuilding, conversion, Navy, military construction. It gives you the description of things that you can use those funds to do, what you can use them to do, and their total obligation period. This is the period that they are good for new contract. You can make new contracts with them. What I want to point out here, so your 1 year or expense type appropriations are MILPERS and O&M. Your investment types are procurement, SCN, and MILCON, military construction. What you also need to zoom in is on the O&M. So those are the overall, and then you need to zoom in on O&M because towards the bottom, you'll see that you can use O&M funding to do minor construction up to $2 million. So if you have construction that's less than $2 million, you can use O&M funding. If you have an older study guide, you probably have $1 million something or a less dollar amount. The 2020 study guide states $2 million. So O&M funds can be used to do construction, minor construction, up to $2 million. You can also use O&M funding to procure things. So that is what purchase of items with investment, if they're $250,000 or less, you can use O&M to procure. That means you can use O&M to buy computers if the dollar amount is less than $250,000. If it's more, then to purchase items that are investment type, you'll have to use request procurement funds. Construction more than $2 million, you'll have to request MILCON funds. So any question on the appropriations time limit? Okay, I don't hear anything. Page 24 goes briefly into the no year. And the first sentence, it talks about the primary no year appropriation is the working capital fund. And an example of a working capital fund is, let's say, your commissary. That's my best example because everybody's familiar, no matter what service you're in, everybody's familiar with the commissary. The commissary initially received funding to set up. But once they set up, the commissary takes their funding to buy the food items to put on the shelf. Based on how, and it's similar to the civilian side, commercial side. Based on what it costs the commissary to put the items on the shelf is what they charge the customers for that year, or that customer during that year to come and buy those items. When the customer buys the items, the working capital fund means that it revolves. It keeps going. The funds the customers bring in is used to then buy more items to put them on the shelf. The difference between a no-year working capital fund and the commercial side is that the working capital fund or the no-year appropriation cannot earn a profit. So the goal is to break even. So if you want to know, okay, that sounds like a commercial, but the government side, we cannot earn a profit. So if, let's say, the commissary looks at their sales for the last 5 years and they have consistently earned a profit, then that 6th year they are required to lower their costs to ensure that they do not appear to consistently earn a profit. Any question on that? I want to make sure that I explain the difference. So no year is the same thing as, that means that appropriation does not expire. It just continuously revolves. So the working capital fund is the best example to help you to remember that no year. All right, page 25 will require you, if you see it again, it's going to require you probably to do some calculations, right? The key with the appropriation life cycle is to remember all appropriations operate on a fiscal year. And it sounds easy because we do it, but the issue that test takers have when they have a test is, if now I throw in, okay, in May 1st, 2005, I received RDT&E funding, and once you start throwing the previous years into it, test takers often get flustered. So I'm going to show you how the best way how to attack it. So if you look at the bottom of page 25, it tells you every appropriation is current. So when we looked at that chart, and it says MILPERS and O&M is 1 year, RDT&E is 2 years, procurement 3 years, shipbuilding, conversion, Navy 5 years, MILCON 5 years. It told you the phase 1 for each of those appropriations that we primarily deal with. So whether it's 1 to 5 years, that means those appropriations are available for new contracts, new obligations. Remember that every appropriation stays in phase 2, the expired state, for 5 additional years. So let's say I have a construction project, it's good for 5 years, and then it is expired for an additional 5 years, so that's 10 years, and the 11th year it enters phase 3, which is canceled or closed. So what can you do when an appropriations enter the expired state? You can make upward or downward adjustments. No new contracts. So if you have an expired account, you can only make adjustments. Phase 3, when it enters the closed state, that means you can no longer make payments out of those pots of appropriation, those funding. However, if you read under the bottom of phase 3, and it will be covered again on the top of page 27, is in phase 3, when an appropriation is closed or canceled, each agency has a 1% rule, meaning that if a bill comes in on that canceled account and you have the funding in current, you're limited to using 1% of that current same appropriation to pay on that closed account. So every appropriation enters phase 1, current, phase 2, 5 years expired, and the 6th year is closed or canceled with that 1% rule. So how you may see it the next time you encounter this information, I'll give you an example. If I say, let's see, today is 5 November 2005, and you just received military construction funding. When will these funds be closed? I'll repeat. An example. You just received military construction funding. Today is 5 November 2005. When will these funds be closed? So what you have to do now is, okay, I have military constructions. So I know military constructions are good in phase 1 for 5 years. But first I need to know what fiscal year I'm in. So 5 November 05 must tell me that I'm in fiscal year 06. So military construction, 5 years, I'm in fiscal year 6. So it is good, phase 1, for fiscal year 6, 7, 8, 9, and 10. That is phase 1. Every appropriation stays expired for an additional 5 years. So that will mean fiscal year 11, 12, 13, 14, 15. Phase 3 then will be fiscal year 16. So, to answer the question, once I've worked all of this out on my scratch paper, I go back to the test, I read the question again. Make sure you read the questions, that you are answering what's being asked. And again, if it says today is 5 November 05, you just received military construction, when are these funds closed? Then now you have the answer, because you have phase 1, phase 2, phase 3. And for my example, these funds will be closed in FY16. That is what's going to be required of you. Your knowledge of the appropriation, their life cycle, and based on the current date, that you know what fiscal year you're in. It's easy if I said it's January 2006, you'll know, okay, I'm in fiscal year 06. But when I go through October, November, December, and if I'm writing a test, I promise you, that's what they teach us to do, is to, okay, take the fiscal year back to October, November, December of 05, when really you are in fiscal year 06. So make sure that you understand the appropriation life cycle. Any question on that? So when you review page 26, 27 at the top, all of that deals with time. 31 U.S. Code 1502. So purpose was 1301, time 1502. On page 26 and the top of 27, it goes into the information, everything that I already discussed, all the way up to the 1% requirement at the top of page 27. That's all the verbiage for what I already stated. So you can read through it. And then amount, Anti-Deficiency Act for amount starts on the middle of page 27. 31 U.S. Code, so it has 3 ADA violations ADA things that you can violate, which is 1341, 1342, and 1517 for amount. So what we're going to do is figure out what's the difference between the 3. Page 28 talks about 1341. And when you read through the description on the slide, it says, make or authorize an expenditure obligation exceeding an amount available in appropriation or fund the expenditure or obligation involving the government. So bottom line is spending appropriation in excess, more than what you received, or before you receive it. So we're talking appropriation. On page 29, it goes into the forms of budget authority. Before we can obligate any funding, we must have the budget authority to do so. And so you can receive budget authority through appropriations, contract, borrowing, offsetting receipts, loan, and loan guarantee. Or you can put this in ABC order, which is ABC, appropriations, borrowing authority, contract authority, loan and loan guarantee, and offsetting receipts. Funding amount, on page 30, you may receive earmarks. And earmarks are limitation guidelines that says you cannot spend any more than X amount of dollars to do construction. Not to exceed is your ceiling, not less than. If they want to make sure that you spend the funding on a certain thing or item, they'll say you can spend no less than X amount of dollars to make this purchase. Those are your floors. And your fences is what I stated earlier, is if that funding is to be used exclusively for your IRT program, and that's the only thing you can use it for, it's a fence. So make sure you know the definitions of ceilings, floors, and fences. Earmarking. So 1341 we said was spending more appropriation before we receive it, or after we receive it, we're spending more. On page 31, you have the second one, which is 31 U.S. Code 1342. 1342, when you read through it, it deals with voluntary services. It's saying, can the government accept voluntary services? And so when you read the paragraph on 31, the first one says, if the compensation of that job is fixed by law, then an appointee may not agree to serve without compensation. What does that mean? If that particular job, let's say Colonel so-and-so's spouse used to work in financial management, he or she wants to come in and, hey, I just volunteered. You can show me what's going on with GFIBs or whatever. And you're GS-12. If that position, that job is a GS-12, so by law, you typically have to pay that individual to do that job, then you cannot accept volunteers. The second one says, if the level of the compensation is discretionary, meaning you have the ability to change it to zero, then and only then can you accept voluntary services. And finally, if that position, if that job already has a statutory authority under law, they are already allowed to have voluntary services such as the Red Cross, the Candy Stripers, the museum volunteers, then and only then can you accept voluntary services. So 31 U.S. Code, so if somebody violates voluntary services, they are violating 31 U.S. Code 1342. And finally, on page 32, the last one deals with a apportionment. Remember, 1341 dealt with appropriation. So apportionment must mean it's something different. So I'm going to take you first to page 33, then I'll come back to 32. The funding flow. So this is the process. When Congress appropriates the funds, two things happen. The legal part of it is the Treasury issuing a Treasury warrant saying, we receive the law, we receive guidance, your account's been set up. That's the legal part. But the funding flow part of it comes through Office of Management and Budget. OMB conducts the apportionment process. Congress appropriates, OMB apportions funds. And let me make sure. So I may bring in some stuff from Module 1 into this portion because all the tests, they overlap anyway, so I want to make sure you understand it. So when Congress appropriates the funding, the two things that happen, OMB begins the apportionment and the Treasury issuing a Treasury warrant. In the apportionment process, within 10 days, the agencies, DOD, Department of Education, they submit their requests on a SF-132 to OMB, Office of Management and Budget. So within 10 days of the appropriation law, the agencies submit the SF-132 to OMB. Then OMB has 30 days to send them their funding. DOD receives their apportionment and DOD issues allotment. So all those A words, appropriation by Congress, apportionment done by OMB, allotment done by the DOD. And then under everyone that falls under the Department of Defense commits, obligates, and we would say disbursement, but for the purpose of the CDFM, the proper term is outlay. And outlay is when the funds are removed from the Treasury or dispersed from the Treasury to pay that bill. So we must be familiar with the term outlay. So let's go back to page 32. So whenever you see apportionment, you should already know, well, who can violate apportionment? Well, only the people that receive an apportionment can violate it. So you're talking the agencies. So it's the same thing. They cannot spend before they receive their apportionment. They cannot receive more than what they receive for their apportionment. Any questions on the funding flow and the to include Purpose, time, and amount. So let's go down there again. Purpose, 1301. Time, 1502. Amount, 1341. I cannot violate the appropriation. 1342, voluntary services. And 1517 deals with apportionment, violating apportionment. So make sure you go back over that portion. All right, so starting on page 34, it says augmentation. Last week when we talked about miscellaneous sources of fund, you can only augment your appropriation if you have the statutory authority to do so. So all of that is tied in together. If you're not allowed to keep those funding, the miscellaneous receipts statute, meaning if you are not allowed to keep the additional funding, then all funding is returned to the miscellaneous receipts account in the Treasury. So on page 35 now, we talk about gifts. So usually when we talk fiscal law, we usually talk about gifts and donations. What are the restrictions? If you notice at the very last paragraph, it is referring you back to Module 1, Competency 2. Why? Because Module 1, Competency 2 has more information on gifts between employees. But for the most part, I'll go ahead and pull what those are. The bottom line is, you see all the other ones, gifts to the U.S., agencies, you can read through that. The last one, gifts to employees. If you go back to Module 1, Competency 2, this is what you'll find. If you're, let's say they're coming around and people are collecting money, someone's leaving, and they ask for donations, you are limited to paying no more than $10 towards that gift. $10. It also asks, can you accept gifts from a contractor? The answer to that is yes, but you are also limited. Let's say a contractor, they do business with you and they have a specific pen that has the name of their contract, their information on it. The value of that pen cannot exceed $20. And within a calendar year, I cannot accept no more than $50 worth of gift from the same contractor. So all of this, what I'm going over now, you have to go back to Module 1, Competency 2, where it talks about the ethics portion of the gifts, but that is what you'll find there. So make sure you review Module 1. Contractor, again, you are limited to $50 a year, and the value of one gift cannot exceed $20. If I'm donating, and when you talk about gifts to employees, that gifts to employees is from subordinate to superior. You to your supervisor. So it does not talk about your supervisor to its employees. So this $10 limit is from the subordinate employees to that supervisor or higher individual. All right, so we talked about ADA violations. We talked about the purpose, time, and amount, the different types of violations. And then on page 36, it goes into the different penalties if you violate the ADA, Anti-Deficiency Act. So you either can have administrative penalties or criminal. Administrative is either retraining, they take the roles from you, or you're placed and removed and placed in a different job or office. Administrative penalties. So remember, in financial management, ignorance is not an excuse. We can't say, well, I didn't know what the fiscal law said, so I just did it. Nope. Or I made a mistake. So in essence, we're supposed to be perfect. So that's why we have different levels of certification, where if you don't catch it, your higher will catch it, somebody else will catch it, because we are not exempt because, okay, I added an extra zero or I put the wrong dollar amount. So ignorance is not an excuse from being penalized. Or you can have criminal penalties, $5,000 fine or 2 years imprisonment, or both. And I will also say, if additional criminal charges can be brought up, then it's probably more than $5,000. But just straight up ADA violation, $5,000 fine or 2 years imprisonment. Any question thus far? If I'm going too fast, you need me to repeat something, please let me know. Okay, I don't hear anything. All right, so when do you report an ADA violation? What are your timelines? So based on page 37, it says you are required, once you know, okay, this is straight up ADA violation. Either we use the wrong appropriation, we can't fix it. We used appropriation that was expired, but we did a new contract. Whatever the issue was, you have some timeline to report it to your hire. Based on page 37, it says you must report it to your hire within 2 weeks of discovery. So you got 2 weeks to notify your hire. And when you read through that paragraph at the very end, it also says you must do a preliminary review, and that review must be completed within 4 months of that initial discovery. So once you know, okay, this is an ADA violation, you got 2 weeks to notify your hire, and then you got to do a preliminary review, find out why it happened, how can we make sure it doesn't happen again, and then you have 4 months from the date of discovery to correct the problem, or to be also give that findings for your review. How you're going to fix it. ADA relief, let's reach on page 38. So as stated, under 31 U.S. Code 1351, there's no private right of action. We can't say at all level, okay, it's an ADA violation, we can't fix it, we're just going to leave it alone, or we're just going to excuse the action. There's no private right for declaring relief under the ADA. So it has to go through the channels for you to then notify all the higher parties who need to be notified. And if you go on, I think it's gao.gov, you'll be able, and look up ADA violations, you'll be able to see some of the samples of what these ADA violations look like. All right, moving along on page 39, it starts with principles for recording. Understanding that before we can obligate any funding, we must have the approved document in hand before we click that button. Again, you have, what is it? Your pecuniary liability. If we pay out something that's incorrect, we are held liable. If we cannot resolve it, we may have to pay money back. So it's important for us to ensure that we have the right approval documents using the right appropriation, the right timeline to do it. So recording principles on page 40 is just regurgitating what an obligation is. Commitment, I'm setting the money aside. Obligation is now legally binding the government to pay for that goods or services. So you have to determine what is your recording principle. What do I mean by that? Like if you do a travel in your DTS, you want to make sure that all the estimates up front cover everything that could happen on that trip. So that when you come back and you settle your voucher, there's already enough funds obligated to fix or settle the voucher, and then you de-obligate the rest. So it depends on whatever your business rules are, because you have to consider if you have a contract that has a benefit in there. Let's say if the contractor delivers the items within 10 days early, they can get a bonus or whatever. You have to determine, do you just obligate the amount of the contract up front, or you obligate the amount and the bonus, and if they earn the bonus, it's already obligated, or you can get additional funding later. So those are things you have to consider with the recording principles. All right, so we go a little bit deeper now, switching gears back to the funding, starting on page 41 and on to continuing resolution. So they're going into more detail. So as I mentioned, if you, under Article 1, Section 9, Clause 7, if we do not have an Appropriation Act in place, valid, approved, then the government will shut down. So if the Appropriation Act cannot be completed, we often enter into a continuing resolution. So a CR is a temporary appropriation law, stopgap. So there are certain guidelines that you must be familiar with. The number one thing is page 42, starts on 42, same rate of operation. So based on how you were operating the previous fiscal year, during that time frame, you cannot spend any more than that. No new contracts is another one, and I don't know if it's listed in that particular paragraph, but one of the other big ones is no new starts, no new contracts. So it just be business as usual under a CR, same rate of operations from the previous year, and let's see what it says. So I want to point out on page 43, because I think way back when I remember seeing something like this in another venue. If it is the intent of the Congress that an agency has no more funds in the current year under the CR, and then they have, okay, so this triggers an example. So let's say you spent $5 million under a CR, and we're now in February. Then Congress appropriated fund, you being DOD, and you've already spent $5 million, and you have to consider Congress only approved $4 million. The question is, have you committed an ADA violation at that point? And the answer is no, because under the rules at that time, the CR, you were operating under your same rate of operations, no new starts. And you, up to that point, previous year, you spent $5 million. But sometimes Congress does not give you what you asked for, so Congress comes back in February and only appropriated $4 million. And that means that, okay, I've spent more, so now I need to figure out how to fix the issue or request additional funding to cover the difference. So that's just an example of understanding the rules that you're operating under at a particular time. Oh, so page 44, the first paragraph. Yeah, there you go. If you obligate at the current rate and Congress finally appropriates at a lesser rate, have you committed an ADA violation? Oh, that's what I just stated, right? The answer is no, right? And then they give you an example. So if you want to see it in black and white, what I just said, it's right there on page 44. So I kind of jumped the gun. So what is sequestration? Sequestration means automatic government funding, right? Federal spending cuts. So that's the basic understanding. Make sure you know what that means. Pay-as-you-go rule requires that tax cuts, increases, and other mandatory spending must be covered by tax increase or cuts in mandatory spending. So pay-as-you-go meaning, so kind of similar to the working capital fund, meaning whatever funding you get in that process will be used to revolve in that process to continue to pay for your mandatory cuts. All right. Page 46 again mentions the shutdown, and again, Article 1, Section 9, Clause 7. Why does it shut down? The law says you got to have an appropriation law or you cannot remove funding from the Treasury. So then who are accountable individuals? I said that as financial managers, we are held accountable. Certifying officers, departmental officers, when you certify the use of those funds, so when they give you a hard time, whoever your hire is, and they said, no, I need the general to sign, or I need the supervisor to sign off, just go ahead and say nod and say yes and give them the documents they need, because once they certify, they now have pecuniary liability, meaning they can also be charged to make payments if it turns out to be a fraud. later on. So we got to make sure everything is there. So a list of the accountable individual, it gives you the definition on 47 on the first paragraph. It tells you a dispersing officer, a collecting officer, a certifying officer, and it tells you who or what they do. So make sure you read through that first paragraph at least on page 47. The bottom of page 48, a certifying officer is not relieved of his or her duties by the press of work, right? It's also saying, I don't care if you got a heavy workload, financial manager, I don't care if you're short-handed, you're the only one working in that office, we are not exempt in any form or fashion from making a mistake. And you see what it says in the second set of slides in the middle of page 48. Factors that do not affect that report. A mistake. I inadvertently added an extra zero. I didn't mean to do it. Lack of intent. It's minor violation. Okay, it's only an extra $1. Difficult working condition, right? I don't like my job. They're working me too hard. Or we don't have enough people to work. Lack of personnel. So those are not excuses for doing what's right. So what do you want to do if you want to cover yourself? If you're not sure, you can get advanced decision on page 49. You can either go to the DOD General Counsel, DOD level. If you're not satisfied with your local counsel, your ethics lawyers, whoever you encounter and you hire and you're still not satisfied, you can reach all the way up to the Army level if you're part of the Army, to the Navy channels, or advanced decision. So the bottom line is telling you, you can get advanced decision, because if it's not written in paperwork and somebody signed off on it, chances to most people it didn't happen. Because people will change their mind real quick when you tell them, okay, now you have obligated X amount of funds to the government without prior approval. And if you don't have that document where they sign, most people would deny it. Page 50, relief of accountable individuals. So CG, I'm reading the slide, CG must grant, again, it is not commanding general, it is Comptroller General. The individual in charge of GAO must grant relief if the Secretary of Defense determine that the relief is appropriate. So let's look at some relief. Certain circumstances, the Comptroller General must grant relief under these conditions. Physical loss. If the loss was not because of anything illegal, improper, let's say you lost the funds, you did everything correct, but you still lost some funds, you still lost some property. If that can be proven, then you must be granted relief. Illegal, incorrect, or improper payment. The payment was not a result of bad faith or reasonable care. You did everything. The certification was based on official records. It was based on, let's say someone brings you the finance side of it. If they brought you a marriage certificate and you give the person BAH, basic allowance for housing, because they gave you, it's not your fault. You went with the document you had in hand. So that's you will be granted relief under those conditions. So what are the statutes of limitations, right? 51. So whenever you, especially with GFIBs hold on to everything. Even if you try to delete something that was saved, all you can do is trash can it. It will never be deleted. It stays in there with your name on it. So statute of limitation, if it's an error, the statute of limitation is 3 years. However, if it's for fraud, meaning it could be 5 years, 10 years, 20 years. However, there's no time limit for the statute of limitation, meaning that someone can come back and say, hey, back in 1980, you was part of this process and you signed this and you don't even remember yesterday. Well, I don't half the time. And so the idea is to remember to make sure that all your T's are crossed, your I's are dotted, you got the right documents, you're using the right appropriation timeline, and so forth, and you'll keep out of trouble. So for error, it's 3 years. For fraud, no time limit. And then we close with the basic idea behind fiscal law is the rule is you must see it in writing to be able to execute the funds accordingly. If it's not listed, does not mean that you get to do it. That's just putting it in my own words. All right, so let me go over some fiscal law terminology on page 53. In the middle, there's one that says Feed and Forage Act. I think this is the only spot that I've seen it in the study guide, but I do know I've seen it and other people have seen it in another forum. And so 41 U.S. Code 6301 Feed and Forage Act. What is it? This particular law allows the Department of Defense to incur, to spend more funding than they receive for a particular purpose. So I would think this will more apply to when they deploy. Let's say like when they had the hurricane or the earthquake in Haiti and the DOD had to go right then. We don't have time to wait until Congress do what they do and they argue and so forth. If the DOD receives orders to go and they have to buy clothing, food, fuel, place for them to stay, medical supplies, transportation, and the list goes on, they are allowed to spend those. And we do similar things today where you do the cost transfer or your cost capture, what you spend for that mission. But under this Feed and Forage Act, that is what allows the DOD to incur in excess of available appropriations. So you make sure you review all the other ones, but I wanted to point out, I often point out this one because it's not mentioned anywhere else. And you should have already seen all the other Treasury. I mentioned Treasury Warrant on page 54. If you want the formal definition for Treasury Warrant, it's listed there. Remember, two things happen once Congress appropriates. And they say, okay, Congress has appropriated the funds. You should know two things get ready to happen. Treasury issuing a Treasury Warrant, or it may be called Appropriation Warrant, and OMB begins the apportionment process. So apportionment and Treasury issuing the Treasury Warrant. So I think we have come to the end of 3.1. You got some scenarios. So understand that in most instances, the exam, when you see it again, I understand I can only go with my experience, is kind of like these examples on page 55 and so forth, is scenario based. So once you read the scenario, you may be asked different questions. So you have to know what right looks like so that you can be able to point out, even though it's a multiple choice exam, if you look at one of my videos on test taking, multiple choice exam also means that more than one of those answers can be correct. But there's one best answer based on what you know. So make sure if you systematically learn the best response for each, then you'll be able to pinpoint. All right, so I will pause now for any particular question before I close out for today. And then the next 2 weeks is basically just reviewing the entire Module 2 as a whole. All right, any question from those on the phone line? And if you're writing question on Facebook, I'll go back later and answer those. But for those on the phone line, if you have particular questions, please feel free to go ahead and ask those questions at this time. 5, 4, 3, 2. No questions? Okay. All right. Thank you all for stopping by. This is Helen Thomas and the CDFM Study Group. If you have not already subscribed to our YouTube page, please, I beg of you, please consider subscribing, because the more subscribers, the more likes, the more comments you leave, what it does, I would say it will motivate YouTube to publicize the YouTube channel more for the CDFM Study Group so more people can find it. So if there's nothing else, starting next week, we'll start the review for Module 2. I thank you all for stopping by. This is Helen Thomas and the CDFM Study Group. I'll see you guys again next time.